Coming up on Business Incorporated. First grain shipment from Ukraine arrives in Africa since start of Russian invasion. And Egypt's Zohr gas field production hits record 2.7 billion cubic meters. And Kenyan boss sees first main market listing since 2018 this year. Hello and welcome to the program. I'm Will Ibang. We begin as always with market numbers at intraday, where major markets in Africa are mostly negative. Nigeria's NGX was the only gainer. It was up 0.01%. The same margin it pulled back with in yesterday's trading session, while South Africa's JSE index fell 0.13%. Elsewhere, Egypt's EGX 30 was also down 0.02% at intraday, while Kenya closed Monday's session in positive territory. It was up 0.25%. Meanwhile, the Kenya Nairobi Securities Exchange says it expects its main market segment listing in more than 3 years to happen before the end of December. And this is to boost activity on the bourse. According to the Chief Executive Officer, Geoffrey Odundo, this will be the first major deal since 2018. And when the Bank of Kigali listed on the Kenyan bourse by introduction, and 2014, when the NSE itself did an initial public offering. The exchange has struggled to find listings as more companies prefer to raise funds from elsewhere. The all-share index of the market valued at 2.15 trillion shillings has dropped 17% since January, and foreign investors, who account for more than half of trading on the NSE, sold some of their holdings amid uncertainty from the August 9 general election. Now to the Middle East, the Abu Dhabi index was up 0.08% at intraday, while Dubai's index rose 0.67%. Still within the region, Saudi Arabia's index fell slightly by 0.07%, while the Qatari index dropped 0.47% at intraday. Now to Europe, the German government says it does not expect Russia to resume gas supplies to Europe once it switches off flows down Nord Stream 1 this week. Germany's biggest importer of Russian gas says it already spent all its government's bailout money and is now asking for billions more. Rob Watts joins me from Berlin. Rob, the German government remains pessimistic about Russian gas supplies. What's the latest on this?
Well, Germany's economy minister, Robert Habeck, is the latest to comment on this. He says it is a bitter reality that Russia will not restore gas supplies to Germany. Now, Russia's Gazprom is due to completely switch off supplies down the Nord Stream 1 gas pipeline to Germany, having already reduced deliveries to just 20% capacity. The shutdown is supposed to be for 3 days, but Robert Habeck clearly believes there's little chance of flows resuming. Moscow's repeatedly denied that it's deliberately throttling gas supplies to Germany. Each time it's reduced flows, it's blamed it on maintenance works. But the government in Berlin is under no illusions that this isn't direct retaliation by President Putin's government against European sanctions on Moscow over its invasion of Ukraine. Now, Germany's efforts to find alternative sources of energy continue apace. I mentioned yesterday its progress in filling up its gas storage capacity ahead of winter. Another controversial development this week is that Germany has reactivated another coal power plant in order to boost its energy supplies. That's something that is desperately needed as German households struggle with already soaring electricity prices.
So it's Germany's biggest importer. Germany is the biggest importer of Russian gas. It's continuing to struggle financially. We've seen that happen recently. But how deep are the problems?
Makes it Well, they're very deep. This is the corporation Uniper, which normally makes its money by selling on gas that it imports from Russia to Germany. However, the lack of flows from Russia, mainly down the Nord Stream 1 pipeline that we've already talked about, means it's been having to get its gas from other, much more expensive sources. As a result of that, back in July, it applied for state aid and received a €9 billion line of credit from Germany's development bank. However, Uniper now says that it's already used up that 9 billion and is now asking for an additional 4 billion euros. It says the money is needed to stabilize the company as gas prices continue to rapidly rise. Now, the importance of Uniper in Germany can't be overstated. It supplies energy to over 100 German municipal utilities and industrial companies. So that's why the German government was so quick to pull together a rescue package back in July. And now it's being called on to rescue Germany's biggest importer of Russian gas once again.
So inflation, investors are looking out for inflation data. What can you tell us about that?
Yes, we'll get a better idea of how prices are rising here in Germany when inflation figures are published this afternoon. Figures are also due from Spain as well. The key thing for markets will be whether they firm up the idea that interest rates across the Eurozone will need to be more aggressively raised to get inflation under control. Inflation in Germany peaked back in May at 7.9% and hasn't dropped below 7.5% in the month since. Across the Eurozone, it remains well above the European Central Bank's target of just 2%, having begun the year at around 4%. The war in Ukraine and the resulting surge in energy prices remains, the main driver, along with the impact that the war has had on global food prices as well. Extreme weather across the globe also hasn't helped with the crop harvests. Plus, we still have the hangover supply bottlenecks from the end of the coronavirus pandemic. So on Tuesday, it's also worth keeping an eye on the euro. It regained some ground against the dollar on Monday, having sagged to a 20-year low in recent weeks. It received a boost, though, as investors began or at least continued to bank on the expectation that the European Central Bank is going to hike interest rates next week, and by 75 percentage points, as the ECB tries to get that surging inflation under control.
Thanks, Rob, for that update. It's always good to talk to you. Now we head to the UK, where people are struggling to cope with the high cost of living crisis amid warnings of a dire winter with rocketing energy bills. Juliana is in London and she has the details. Juliana, how are you doing today? Hi, Juliana.
I'm doing great, Will. I think this camera view is better than my camera at home.
So the UK Chancellor Nadhim Zahawi is visiting the US for talks on how to tackle the spiraling cost of living. What are they hoping to get from this?
Well, it's a good question, Will, and I think it's a question that lots of Nadhim Zahawi's critics have been asking. In fact, one Labour government spokesperson said this is just a jet-setting chinwag for the Chancellor, and I presume the reason why they're saying that is because there are just a few more days left for Nadhim Zahawi. He is in this caretaker government. He was appointed the successor of Rishi Sunak when he decided to hand in his resignation. So he doesn't have many days left. We know that we're going to get a new Prime Minister on Monday, but it is an official trip and it is supposed to be answering some important questions, which is what is the future of Britain's energy, particularly as they try to stay away from Europe and its dependency on Putin. So there are two parts to the trip. First of all, he'll be in New York. He'll be speaking with some pretty senior bankers there, talking about deregulation in a post-Brexit Britain world. And then he'll be heading off to Washington for much more important conversations, which he'll be having with the US Treasury and the US Central Bank. Got to talk about the cost of living, a massive issue here in the UK, particularly as just on Friday, Ofgem, the energy regulator, hiked up the benchmark by 80%. So at the moment, it's going to cost the average British household about £3,500 a year to heat their homes, and it could rise to even £6,000 in January. So it's a good thing that the Conservative government are trying to draw out policy for the long term. But I think for most Britons in this UK at the moment, it's the short-term issue that they are trying to resolve. And we're waiting with a bated breath on what some of these solutions may be.
Yeah, sure. Labour isn't particularly pleased with this trip, but the Bank of England says UK credit lending and mortgage interest has jumped. The growing strain is biting hard on households still, Juliana.
Absolutely, that's right. We've just had some consumer spending data released by the Bank of England for the month of July, showing that consumer spending is on the up. In fact, it's at its highest in about 3 years. It increased about 6.9%, I believe, in the month of July. And consumer credit, it takes on lots of different things. So we're talking about overdrafts, we're talking about credit cards, of course, the amount of people that are taking out loans to buy cars. And it does go to show that people are really struggling at the moment. They're not able to use their wages because wages are not going far enough, which is why we've seen a season of summer strikes here in the UK, and they're trying to keep a hold of their savings. You'll remember during the pandemic when we were locked down for 2 years, consumer spending habits changed. A lot of people were lucky enough to get furlough or one of those bounce back loans from the government, and rather than spending that money, putting it back into the economy, they were hoarding it in their bank accounts. Now that we've got inflation at a 40-year high, people are having to dip into those savings, and if you're unfortunate enough to not have savings, you are going to be using your credit card. So just once again, some more data that reaffirms and doubles down on the sentiment that Britain is going through a pretty hard time at the moment, and in fact it's going through a worse time than any of its other G7 comparative economies.
These are hard times and these are difficult things to choose, Juliana. So how's the market looking at the intraday?
Yeah, the market's doing pretty well. I was speaking to Inni on Business Morning today about sterling, which is really suffering over fears of a recession. Andrew Bailey, the Bank of England governor, has said before the end of the year, Britain is likely to enter into a 5-quarter recession. This is really pushing the British pound to record lows against the US dollar. In fact, there are some suggestions that the British pound could be as low as $1.14, which it hasn't seen since 1985. So pretty serious here. But of course, when the British pound is trading lower, it pushes up the kind of foreign-focused FTSE All-Share, which is why at intraday it is up 0.29%. The FTSE 100 up to at 0.17%, and the FTSE 250, that domestic market, up by 0.88% off of some positive company news here. The British pound, as I was saying, trading actually up slightly against the US dollar by 0.19%. 1 British pound will buy you $1.17, still at record lows though it's trading down against the euro by 0.26%, but trading down too against the Japanese yen at intraday by 0.11%. Will.
Hope these bullish sentiments continue. Thanks so much, Juliana, for joining us. And now we move over to Asia, where shares were mixed on Tuesday after sharp falls to start the week following Fed Chair Jerome Powell's hawkish speech in Jackson Hole. Japan's Nikkei 225 rose 1.14% to end the session at 28,195 points, and the Topix index gained 1.25%. We can see that in South Korea's Kospi was up almost 1%, and Australia's ASX 200 was also up 0.47%. Hong Kong's Hang Seng Index, however, declined 0.42%, so you see there. And then the tech index was also down 0.7%, while the mainland Chinese stocks slipped. The China Composite fell 0.42% as well to close the trading session. Now in the U.S., stock futures ticked higher early on Tuesday as Wall Street saw stability after another down day for stocks. Futures for the S&P 500 inched upward by 0.38%, while NASDAQ 100 futures also added 0.5%. Futures for the Dow Jones Industrial Average gained 100 points. The moves in futures followed the second straight decline for the major averages. The Dow Jones lost 184 points, or 0.5%. The NASDAQ Composite sank 1.02%. The market has given back some of its summer gains after recent comments by Federal Reserve officials made clear that the central bank aims to continue its rate hikes, even if they cause economic pain. Later today, investors will get several updates on the state of the economy, including the FHFA Home Price Index for June, the Conference Board's Consumer Conference Survey for August, and the Bureau of Labor Statistics job openings release for July. Now, oil prices fell in early trade on Tuesday after notching their highest gains in more than a month in the previous session as global inflation worries overshadowed the prospect of possible OPEC Plus output cuts. The Brent crude futures fell 0.3% to $104.70 a barrel after climbing 4.1% on Monday. U.S. West Texas Intermediate crude was at $96.79 a barrel, down 0.2%, following a 4.2% rise in the previous session. Inflation is near double-digit territory in many of the world's biggest economies, a level not seen in close to half a century, and investors are concerned that more aggressive interest rate hikes will follow from the United States and Europe. Also weighing on prices, Russia's oil output has exceeded expectations in the wake of the war in Ukraine, and that's according to the head of the International Energy Agency, IEA. However, it said that Moscow, which calls its actions in Ukraine a special operation, will find it increasingly difficult to uphold production as Western sanctions begin to bite. It adds that the IEA member nations could release more oil from strategic petroleum reserves if they find it necessary when the current scheme expires. Last week, Saudi Arabia, top producer in the Organization of Petroleum Exporting Countries, raised the possibility of production cuts, which could coincide with a boost in supply from Iran, should it clinch a nuclear deal with the West. Next, commodities updates. And that's in a moment. This is Business Incorporated. So stay with us. Welcome back. Apple Incorporated, the world's most valuable company with a market cap of $2.6 trillion after Saudi Aramco, is set to unveil the iPhone 14 on September the 7th, alongside a host of other products such as the iWatch Series 8. Apple has made a very seamless transition from being a hardware manufacturing company to include being a service company. The growth of its service business is far outpacing that of the hardware business. Apple's strategy has been to be a premium device producer. Maya Waige, senior associate with financial derivatives company, joins me to discuss this. How this launch impacts Africa. Hi, Maya, good to speak to you.
Hello, Bill. Thank you for having me.
So, Maya, what are the implications of the launch of the iPhone 14 on Africa in general, especially in Nigeria, particularly as Nigeria is classified as a low-income country?
Well, I think first it's important to look at the smartphone market as a whole, right? We're going to look at the market share of smartphone makers in Africa. First, we have a larger percent. We have Techno, Intel, Infinix holding a larger market share, and then Samsung before you come all the way to Apple. So Apple's market share is not that huge in Africa as a whole, and the reason but this is that Apple is more of a premium product, and then the Intel, Techno, Infinix have a larger market share because of their price point, their low price, and then Africa and Nigeria have the citizens of these nations have a lower disposable income, and so they flock to these cheaper models, right? And so when we look at that, and then we now look at the smartphone market as a whole in first quarter of this year, second quarter of this year, there's been a decline in smartphone shipments to Africa. In Q1, it declined by 15.7% and Q2 7.8%. And the reason for this is macroeconomic issues, inflation, which is caused by food shortages, fuel shortages, and also we have declining domestic currencies against the US dollar, and this has greatly reduced purchasing power of consumers. And so when we have inflation, a drop in disposable income, a smartphone is not the first necessity for people anymore. They're just thinking of how to survive. And so this is why we have actually seen a decline. And so looking at the iPhone 14 release on Africa is not people already battling with major issues. I don't think that there will be much flocking to the iPhone 14 or in this period. But then again, when we look at Nigeria as a country, a lot of Nigerians are aspirational in nature, right? And so there's with that comes a bit of an anomaly. We'll still have a certain percentage of people who would buy this product. There'll obviously be a media frenzy about it, right? But also coming with a new product means that other iPhone product prices will be reduced, and so you'll see Nigerians buying those models and also buying more UK used models for some Nigerians, because the dollar, the exchange rate will still be an issue that would impact the prices.
So the 5G network has already been launched in Nigeria, and we're seeing this is really great for streaming, video conferencing. You know, it makes work easier, it makes life easier for a lot of people. But there's a strategy of trying to sell, you know, these devices at very low cost. But doesn't it contradict the strategy of financial inclusion and also trying to appeal to the elite in the country?
No, I don't think it contradicts any one another, because when you look at it, the main focus is internet connectivity, and then the few people that can, at least that can afford the iPhone products and the likes, will buy those products for the 5G, and then the people who cannot afford it, these telcos are coming out with different solutions for how the for on solutions on how these people, the mass market, can actually afford devices that will enable them use the 5G network. Because one of the major challenges or the drawbacks of the 5G network or concerns have been that we wouldn't be, because of the price of the 5G phones, there would not be a lot of adoption of it, and this would impact the expansion of the network. And so we are seeing the likes of MTN coming up with pre-order for modems for 50,000 naira in order to get people on the network, in order to drive expansion of the 5G network. And this is not strange. I mean, they would only be copying the likes of AT&T, Verizon, who generate their business models, have come with a phone and the internet service as a bundle at reduced monthly rates.
So thank you so much, Myra, for those insights. We hope that 5G network rollouts will be a great thing for Nigeria, especially the fact that we have power supply problems in the country, and we hope that that does not become an impediment for the growth of that sector, of the telco sector in Nigeria. Thank you so much, Myra, for joining us. So move on to other stories, where the first grain shipment from Ukraine to Africa, since Russia's invasion began more than 6 months ago, has docked in Djibouti. This was confirmed by the executive director of the United Nations World Food Programme, WFP, David Beasley. After 14 days at sea, the shipments of 23,000 metric tons of wheat arrived on the MV Brave Commander in the Horn of Africa and will be used to support the WFP's humanitarian response in the region, where over 20 million people face hunger. The WFP says people across Ethiopia, Kenya, and Somalia face severe hunger as the Horn of Africa experiences some of the driest conditions it's seen in decades. The drought is the worst in 40 years for Ethiopia. And now the Egyptian Ministry of Petroleum and Mineral Resources has announced that the Zohr gas field has achieved a record during the fiscal year of 2021 and 2022 since the start of production in 2017. According to the ministry, its current output from Zohr gas field has jumped to 2.7 billion cubic meters per day. The ministry further adds that the volume of investments in the gas field hit $741 million during the period, and investments have exceeded $12 billion for the year. And that's it on the program. I'm Will Ibong. Thanks for watching.